Hello and welcome to another episode of Darwin Investors. All right, so earlier this week I received a message in my comments that said that USOI was set to distribute a $3.33 per share dividend this month. And then when I read this, I'm like, well, this is just something that I have to look into because this could possibly be something that I'm interested in pouring a lot of money into. So I'm gonna go ahead and let you know what I found out about this. Also in this episode, we've got a big CPI report that's coming out on February 14th. I've been pretty good with these inflation forecasts. I'll let you know what my numbers are, but word of warning, even though you know what the inflation forecast number is, it's kind of difficult right now to determine the direction the market will go in, even if you know the result, because right now the market seems to be moving more on short covering and earnings than it is on inflation. But for what it's worth, I'll go ahead and give you that inflation print. So there's a lot to cover, so let's go ahead and get into this. So USOI is the Credit Suisse crude oil shares covered call exchange traded note. What it does is it sells covered calls 6% out of the money on the USO, or the United States Oil Fund, exchange traded product. If you really want to know more about USOI, I did another video about this a couple of weeks ago. I'll leave a link right up here. Please click on it and you can find out more about USOI and how it can actually give you such a nice dividend every month. But for this video, we're going to see that it trades currently at $84.66 a share. Over the past say 4 months here, it's giving you $1.38 per share, $1.23, $1.76, $2.45, and it's traded up as high as say $5.06 per share so far in the last 12 months. If we look in the last 6 months here, we can see that the USOI tends to trade anywhere between $75 and say $92 or even $94 a share. $85 would be pretty much right in the middle for where it normally would trade. So if you buy this sort of thing, know you got a 50% chance it's going to go up and a 50% chance it's going to go down. It's going to go X on February 21st. The pay date is going to be February 27th, and the dividend payment is going to be $3.33, just as Mark Miller had said in the comments section. So how is USOI able to generate such a generous return for us investors? Well, that goes back to the way that it's trading covered calls against the United States Oil Fund exchange traded product. So let's go ahead and look at see how much money they're getting from selling covered calls, 6% of that money on USO. So oil is a very volatile commodity, so for that it generates a pretty high premium. If we go ahead and click on USO, instead of hitting stock, you hit call. Instead of hitting buy, you hit sell, because we're going to be selling calls against the underlying here. We'll have an expiration date of the 3rd of March, and we'll try and find something roughly 6% out of the money, which would be $74. That would give us 81 cents per share, or $81 a contract, because each contract is 100 shares. And the way that this works is if United States Oil Fund finishes over $74, let's say it's $75, you got to sell them all your shares of United States Oil for $74 a piece. That's what this contract says. So if it's over 74 by the 3rd of March, you have to sell them all for $74, even if it's $75. For that, someone is going to pay you 81 cents a share, or $81 a contract, to hold this contract for them. If it should finish below $74, say $73, you get to keep all your shares of USO, and you also keep their premium. Now, remind you that even though that this would sell at $74, you still get all the stock appreciation between $69.87 and $74. So it's not exactly a bad deal for you, even if it does go to $75. And that's why so many people do this. So what are the chances that USO is going to finish above $70 a share by the 3rd of March, or below $70 a share by the 3rd of March, and by extension USOI? Well, let's go ahead and have a look at this chart here, and we can see over the past 6 months, it's pretty much in the middle. So I would say about a 50-50 chance it's going to finish up or down, and it really closely follows the crude oil prices. And so when you look at crude oil right now, crude oil is in the yellow here and USO is in the blue. They just pretty much just follow each other along this path, and USOI does the same thing. And so we can see over the past 6 months, USO is down 6.82%, oil is down 12.86%, and the Credit Suisse USOI is down 10%. The most stable of all of these seems to be the USO ETP, or what they're calling an ETF right here. So USO is not a bad deal because it's not of the underlying commodities here, it seems to be the less volatile of the bunch. However, USO, because it's not as volatile, is sitting right here in the middle of its trading range. Crude oil seems to be at the bottom of its or closer to the bottom of its trading range, and USOI is following crude oil very closely. So we would say that USOI might be kind of closer to the bottom of its trading range as well. Now, oil had a pop this past Friday, and the reason for this was because Russia said that it's going to cut output by 500,000 barrels a day. And this was on February 10th. And what that did was it sent the price of oil up pretty high on Friday. You can see that right here. You can tell when they said they were going to cut production was right about here at about 3:22 a.m. on February 10th, and then it sent everything straight up in a straight line. So I think that what's going to happen is through the weekend that the markets are going to kind of normalize, and I would think that we're going to get a fall off in oil prices. So we'll get a better entry for USOI and for United States oil on Monday. I suspect. You never know, but I just suspect that's going to be the case. So that's a little bit of details about USOI. We know that they've got the X date that's going to be the 21st of February, and they've got a pay date of the 27th of February. Now, I know there isn't a stock out there that I won't sell. So I have sold stocks before after the X date, and I still get the dividend from it. Let's say that this thing goes X on the 21st and I sell it on the 22nd. I'll still get the money by selling it on the 22nd. But in this case, it's so much money that I'm going to just go ahead and hold it on until I see the money in the account because I'm paranoid like that. But let's just say that they pay us on the 27th. So then I looked into, well, what about the JEPI dividend history? When do they normally go X and when do they normally pay? Well, if you look at the last one, they paid on the 1st of February and the payment date was the 6th of February. And if you look at this, pretty much every month they pay on the 1st. It's almost like clockwork with the exception of December's. And I'm guessing that this has something to do with tax reasons or something like that. But by and large, they pay on the 1st. So if I go over here and I look at this calendar and they're going to, and USOI is going to pay me on the 27th, I can check on the 28th to make sure the money's there, and then I can transfer it all over to JEPI, and then it can go X on the 1st, and then I might receive my JEPI money on like the 6th or 7th, and I can double up on my dividends here. So yeah, I'm going to be greedy. I'm not telling you to do it. I'm saying you can live vicariously through me, and I'll let you know if it worked. So I found myself with a bunch of possibilities that I could use to try and make a bunch of quick money off of dividends. And so I put together a PowerPoint presentation to kind of detail all of the different returns that I could get given each different strategy. So let's say that I had $50,000 and I just stuck it all into USOI. And right now it's trading for $84.66 a share. I could buy 590 shares. And then when it goes X on the 21st, I have the potential to get $3.33 a share or $1,966 in dividends. What that represents is if you annualize that, that's almost $40 for the year. So that's a 47% annualized dividend return. Plus I have a 50% chance that USOI is actually going to appreciate between now and the 27th of February. And that's if oil prices go up. So that's one option is I just buy USOI and I get my $3.33 a share. The next option is that I go ahead and just buy USO myself. And I do what Credit Suisse is doing, and I just sell covered call 6% out of the money. Now, for $50,000, I could get 715 shares. We saw earlier that I could get $81 a contract for $74 strike price. That would give me $567 in premium. Plus I get share appreciation on USO. Now it's trading in the middle of its range as well. It doesn't go up or down as much, but let's say for the sake of argument that with the $74 strike price, it finishes at say $4 higher than it is now at $73.87. That would give me $2,860 in USO ETP appreciation. You add that to the $567 of premium, I would get $3,427. Remember before with USOI, I was getting $1,966, but that's provided USOI doesn't appreciate as well. The final option is that I get USOI and I get JEPI. And then, so I would get the 50,000 shares or $50,000 worth of USOI, would give me 590 shares. pay the 1966, then I move it over to JEPI, and you don't really know what JEPI is going to pay out every month, but let's just go ahead and say, for the sake of argument, it's going to pay 50 cents a share, because that seems to be right in the middle of the range of what it seems to pay every month. I would get 948 shares of JEPI because at the moment it's trading for $54.77 a piece. So that would give me about $474 in dividends. If I add that to the 1966, I have the potential of getting $2,440 in dividends out of USOI and JEPI. So my risk appetite for this is, I think I'm going to take this approach here. What I think I'm going to do is I'm going to buy the USOI by the 21st. What I'm hoping for is sometime before the 21st of February, I'm going to get a pretty good down day for WTI crude. Let's say it gets right around $75 a barrel. Then I'm going to buy up a bunch of USOI. And I need that to happen sometime before the 21st of February. And then when it goes X on the 21st, I'm still going to wait until it actually pays me on the 27th. And I'll know for sure by the 28th if I got the money. On that day, then I'm going to buy a whole bunch of JEPI because it should go X on the 1st of March. And that's my plan. I encourage you to live vicariously through me. I'm not telling anybody else to do this. This is just something I'm going to do. Check back with me in a couple of weeks and I'll let you know if it worked or not. All right, so the next thing we're going to do is have a look at the inflation forecast that's coming up. So the big news this week for sure is going to be the CPI release. It seems to be a huge deal every single month. It's actually be coming out on Valentine's Day, February 14th. Guys, that's next Tuesday. That means Monday night, get out there and buy some chocolate or something like that for your missus. And it's going to come out at 8:30 a.m. Eastern time. You know, I'm like a full opportunity finance channel here. I help out your love life. I help out your finances as much as I can anyway. But I digress. So we can see that inflation has been going down month over month. Last month it was down negative 0.1%, and it seems to be over the last 6 months it's anywhere between negative 0.1 and as high as 0.4. It used to be much higher at 1.3% month over month, and before that was 1.3 and 1 and everything like that. So that's why Jerome Powell is coming out saying that we are in a disinflationary period. Not that things are going down, but that the rate of inflation is coming down, and that's what's represented by these smaller numbers relative to this larger number here. When we look right now, last month it said it was 6.5% in December of 2022 was the year-over-year rate of inflation. If you look at the numbers, this is actually inaccurate. It's actually 6.4%. I'll show you that in a second. I actually have known this for several weeks, but I never put it on this channel. But we're actually at 6.4%, so that gives us a little bit of a head start on this month's inflation read. The projection, the consensus projection is for 6.2%. The forecast is for 6.3%. When we look at the year-on-year inflation rate here, all you do is you just take this number here, the 298.99, and you divide it by the number that it was a year ago, which is 280.887. 298.99 divided by 280.877. And you get the 6.4% that I was talking about earlier. You know, I was always taught that if it's above 6.5, you round it up. If it's above, below, you round it down. I would have probably rounded this down to 6.4. They probably did us a favor, actually round this up to 6.5. But, like I was saying, this last month's inflation read was actually 6.4%, and that's going to help us this month going forward. Now, remember, next month, it's supposed to be 6.2%. That's the consensus. If you look at the forecast here, you're going to be let down. The consensus is always the one that seems to matter. So if you want 6.2%, so all you do then is you take this here number here, 282.599, and you multiply that by 1.062. And you're going to get this number of 300.12, and that's the number we would anticipate would be here in January. And at least that's the consensus forecast. If you divide that number by this month's number, which is 298.99, we're going to see that the month-on-month inflation that they're expecting is roughly 0.38, or they're going to call it 0.4. If you look at what it's been here recently, 0.4 is pretty reasonable. Now let's go down this little column here and see whether or not we believe 0.4 would be too high or if it's going to be too low. Food at home we would expect to be roughly even or perhaps even a little bit up. I think there was a big deal about eggs last month. though chicken prices came down. We saw the Tyson results came in. There's been a lot of food companies that have been reporting their earnings this past quarter, and they have not been good. So I don't know if food's going to go up or down. For whatever reason, eggs got a lot of attention because of the bird flu, but by and large, I don't think that all we're eating is eggs every single day of our lives. So I would expect that this number is going to come in roughly the same as it had been, though I do expect that energy is going to come in a little bit higher for January than it was for December. I think I remember gasoline prices last month being higher relative to those of December. Now we're back now where we were in December, but I think in January it was up a little bit. So I think this is going to be the same, and this might go up a little bit. Now our energy services might come, oddly enough, come down, even though it's the winter months, because natural gas has absolutely been tanking. So I think that this is going to come down. Energy is going to go up, and food's going to stay the same. So I think it's going to be a wash. I would say that new vehicles are going to come down. Used cars and trucks can't come down every single month. I expect this number to stabilize at some point. I think apparel is actually going to come down. If I was going to buy clothes, I think that they're actually a little bit cheaper, at least if you look at the Nordstroms and Macy's earning statements. They're giving a lot of deals right now on apparel, just to keep the doors open. So I expect this number to come down. Services, less energy. Shelter, they say it's going to take until June to come down. We all know plane tickets are still expensive. So I think that all in all, I don't personally feel like and this is just anecdotal, like everything's just going through the roof. But if it was going up 0.1, I would never know. Same as 0.4. But just kind of looking at these numbers, I think that 0.4 number is pretty fair. I think 6.2% is probably going to be in the cards for us. But let's see what 6.2% would do for us for the stock market. I don't think it does a whole lot for us. I think that it's neither going to send it up or down because we haven't broken that barrier of 6%. Let's see how low it would have to be to actually break that 6% barrier and actually send this stock market to the moon. Because the second this thing comes down to 5.99, the stock market's going to take off. So let's see what number that would have to be month over month. So if we took this number here, 298.99, and you multiply that by 1.001, that would get us 299.28. You divide that by this month here, 282.599. That would do it. So 0.1 month over month would get it done. I'm just don't have a lot of confidence looking at these numbers here, unless there's some huge surprise, like let's say medical care. You see how we went from negative 0.6 to negative 0.7? Unless something like medical care comes way down or something else kind of surprises to the downside, like apparel really crashes or something along, or the energy services really crash, I don't see us getting to 0.1 month over month just because energy prices have stayed stable, and I feel like food has been pretty stable as well. So I think that it's actually going to come out pretty much in line with the consensus here of 6.2. I don't think that 0.4 month over month is a ridiculous prediction at all. If anything, it'll go to 0.3 month over month, and 0.3 month over month, that's not going to do much at all. Let's say if this was 0.3 instead of 0.4, that would mean that 298.99 times 1.003 equals 299. You divide that by this number here, 282.599. And that would equal 6.117% or 6.2%. I just don't see that until you go below 6%. I don't think that anything's going to send this market appreciably higher. I think if it goes 6.2, 6.1, no one's really going to care at that point. It isn't until it dips below 6 that anybody's really going to care. Now, that's my 2 cents. People may look at this and think, oh, that's amazing, that's marvelous, that's wonderful, but I just don't think that that's going to be the case. And I don't see this moving the market much at all, up or down. It's still going to come down to covering your shorts and earnings. Well, that's going to do it for the week. If you watch this, you know that I can just talk and talk and talk. And last week I had a really good week. I had like nothing but energy stocks because they all went to the moon. My portfolio did the same. I was on the wheel strategy. Of course, I've had to roll those things up. Maybe we'll go into the XLE at some later video and kind of talk about what sorts of stocks we want to get into and why we might want to go into energy. Maybe it's a hedge against the NASDAQ and that sort of thing. It's just a little bit of a preview about what I intend to talk about. But for now, I'm really appreciative of the people that like check out this channel. And you know, when you start something like this, what you are is you're kind of nervous that you're just going to get trolled. It's not that you don't want to start a channel. What you don't want to be is harassed. And so what I'm saying is that the people that check out this channel have always been very kind to me. Shout out to Dave, Bob, retired in 2020, Mark Miller. You guys have always been fantastic to me. For that, I'm going to give you a big hearty cheers from my sponsor this week, which is beer. Well, this here beer, this is Lagunitas Daytime IPA. It's got 98 calories, 3 carbs, and man, you can taste the fitness in this sucker. For that, I'm gonna have to give it 3 Kate Rooneys out of 3. I mean, I would say that if you're actually going to train for, say, an Ironman triathlon or maybe a Mr. Universe competition, if they still have those, this is the product for you. But in all seriousness, I'm really appreciative of you guys that check out this channel. Right now, I've got the sweatshirt on. I'm not selling any of these, by the way, but just the sweatshirt on. Beer No Evil Brewing Company. This is my own fictitious brewery that I have in my garage that I've always had when like people come over and we brew beer and that sort of thing. So I create t-shirts. I have a couple t-shirts that I made for different things. Just letting people know that brewing beer is just another one of my hobbies that I have in addition to investing and sometimes losing money and sometimes making money. All right. So if you got anything out of this, yeah, please like, subscribe, hit that little notification bell. Until then, we'll see you next time. Have a great day. Bye. All right. Well, today we brewed Firestone Walker Union Jack IPA. We've done a good mash. We have done a low mash. We've kept the recipe simple. We've added hops a little bit at the beginning, a lot at the end. We preserved our aroma hops. We preserved our flavor hops. The only thing we've forgotten to do is bring our guitars, John. Sorry, guys. So what we're going to do is rock the only other way we know how, because we've had a good brew day. Now it's time where Beer No Evil decides to rock.